This is Carl Dahm with the Real P&L channel. Welcome to lesson number 8 of my 8-part series, Stocks versus Options. Next I will go over Options Advantage number 6. Options Advantage number 6 is better return on risk. And what I mean by that is for every dollar risks, how much is your worth? For example, every dollar that you risk, how much in return are you getting for that $1 risk? You can see graph number 1 on the rising bull market. The S&P rose about 19.5%, and it didn't really show that there was any risk because there weren't any drawdowns during that period. So in the rising bull market, obviously the S&P performs really well. Looking at the modern options portfolio in the rising bull market, you can see that there was a very slight drawdown and around a 10% return. So maybe a 0.5% drawdown and a 10% return. So your return per dollar is pretty high. Next, looking at the sideways market, you can see that the S&P had about a 4% drawdown and just barely broke even. So you really didn't get any return for that drawdown. So there was risk, but there really didn't show any return there. As far as the modern options portfolio in the sideways market, you can see that there really didn't show any risk because there weren't any drawdowns, and then you can just see the 8% return. Looking at the grind down market for the S&P, you had about a 19.5% drawdown over that period, and in fact you didn't make any money over that period, you lost over 13%. So really, there wasn't any return for that risk. There was just risk there and a loss. The modern options portfolio had about 1% risk with approximately a 3% gain, so you risk about $1 to make 3 with the modern options portfolio in the grind down market in late 2018. Looking at the crash market, you can see the S&P was down around 10%. It ended down around 10% during that short 9-day period during that crash. You really didn't have any return on your risk. You can see that you had a risk of 10% there. You didn't get any return off of that in the crash market. With the modern options portfolio in the crash market, you saw about a 10% drawdown, but then you saw about a 7% return. That's close to a 1-to-1 ratio. You risked 1, you made 1 approximately. But you did have a return for your risk, or you didn't have any risk in all 4 market types for the modern options portfolio. Okay, so just to recap, lesson number 1 was about liquidity, and stocks take the edge when it comes to liquidity over options. Lesson number 2 was about trade execution. And if you play your cards right with options, you can equal the playing field when it comes to trade execution with stocks and options. Number 3 had to do with direction. If you don't have to choose a direction, if you don't with a modern options portfolio, you definitely give the edge to the options portfolio there. Number 4, we talked about diversification. I went over how the options portfolio through the different market types is actually more diversified than a well thought out stock portfolio. Number 5, time. You always want to have time on your side. Sell depreciating assets, and then over time they depreciate, you buy them back, you make money. You cannot do that with stocks. Then you have the option seller's edge, the edge of possibility, the overpriced premium of options that you can sell. That's an edge. You cannot get that edge with stocks. And lesson number 7, I went over drawdowns and how they would lower with a modern options portfolio versus the S&P 500. And remember, if you have lower drawdowns, it's a lot easier to recover. And recovery is the key to make better returns. And number 8, higher return on risk. So the amount of money that you risk and the amount of money you get in return for that is higher with a modern options portfolio versus the S&P 500. This concludes my course on stocks versus options. I hope you have enjoyed the 8 lessons. If you feel like you've learned anything from any of these 8 lessons, please subscribe, click the like button, and click the notification bell. This will promote the video on YouTube and provide opportunity for others to see it. If you're interested in watching a modern options portfolio in action with the Real P&L posted on a daily basis, just subscribe to Real P&L.